What's up everybody, welcome to the Stocks channel. My name is Cory and today in the stock market we continue to push higher as we continue the short squeeze, and I do think there's going to be many traps along the way. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so here we are with SPY going up 1.25% today, and today you found out we were officially in a recession and we still have bad earnings. Fundamentally, the picture has not changed one bit, yet the stock market continues to go up on higher volume. This is why I tell you follow price action and do not ignore what the chart is telling you, because you are going to find out very quickly that if you do not have a trade plan that depends on the chart, you are going to be very confused on why the stock market is moving in the direction it's moving. Tomorrow you're going to wake up and we're still going to be in a recession, we are still going to have high inflation, and there are still going to be corporate earnings missing on their guidance, and we are still likely going to continue this bull trend. So trade with a plan and understand your critical risk levels and try to follow the trend, because right now we are still in a bull trend, and this bull trend can last for who knows how long. There is no reason trying to guess when it's going to end. We are simply going to follow what the chart is telling us. So for that reason on SPY, I would up your risk level now to 399 because we do want to continue to raise our risk level as we go higher. That way, if we do have this trend reverse on us, we will lock in a profit and we will not get caught holding any bags. If you want to get a little more risky, you could set your risk down here right around 395, but I do suggest setting your risk at 399. Upside price targets from here will be 409.5, and you could round that up to about 410. And then we will likely start trending towards 421, where the big bad bear is just waiting to take a bite of some bulls. On the way to 421, we do have a price target of resistance we do need to respect, and that will be right around 416. Now you can see on the volume, we are continuing to go up on increasing volume after that low volume sell-off, which was the bear trap that we correctly identified. So do not get bear trapped if you see any low volume selling. That is a buying opportunity as long as you are in a bull trend. Hammer that into your brain no matter how fundamentally bearish you are. This is a bull trend and price action continues to look bullish. If you don't want to be bullish, at least go to cash and wait it out. Do not short a bull trend. There is no reason to do so. You are much better off waiting until the bull trend reverses. So for that reason, we will get a lot more cautious when SPY breaks down below 399 and 395. And of course, we do have risk down there right around 390. But if you are trading this market, you do want your risk up here at 399. And that so far does look like it is containing the strong bull trend. And if we are indeed in a strong bull trend, we should not come back down below 399. That is why I suggest setting your risk at that level. Also keep in mind this market is very likely in a short squeeze, so there will be shorts that are caught holding bags that will need to capitulate out of their short positions as long as we have a bull trend, but there will also be bull traps alike. So if we start gapping up outside the upper Bollinger Band and just going way too far, way too fast, I do not suggest trying to chase a rally just because you missed it. Wait until the next best buying opportunity, which is always going to be close to the risk level, because the closer you buy to the risk level, the much less risk you are taking on. Get in the habit of having great risk-reward ratios. That way you can still be a profitable trader even if you have to take a few losses. On the NASDAQ 100 triple Qs, we were up nearly 1% today, and we did get the next bullish breakout with that close back over 308. And we now see we are continuing to form higher lows and higher highs, which is how every single bull trend starts. You can see we had decent buying volume as the shorts are beginning to get squeezed, and we are very likely trending up to about 320 to 324 on the triple Qs, and there will be a big hungry bear waiting at that level. Upside resistance levels on the way there will be right around 313.5 and 317.5. So watch those resistance levels, but understand in the longer term, as long as we have this bull trend, we are very likely heading up to test that resistance and price target at 324. Critical risk levels in the triple Qs will be at 308 and our 50 EMA down here right around 299. So as long as we are above those two critical support levels, we are very likely going to continue to push higher. In the most bullish scenario, we should not break down below 307. So that is the tightest risk level you could use at this point. But as long as we are above 296, it is still a bull trend. If we start breaking through all of this support, we can get a lot more risk off, but we do want to stay on the bull as long as we have a bull trend and as we continue to see bullish price action. In the Dow Jones, we were up 1% today, and we did close outside the upper Bollinger Band as we continue to push higher in this bull trend. In the Dow Jones, you could set your risk at 320 and our 50 EMA at 318, because as long as we're above those levels, we do want to stay bullish. The next upside price target in the Dow Jones will be retesting the daily highs at 333, so do expect us to continue to climb higher as long as we're above this critical support zone. In the Russell 2000 IWM ETF, we were up 1.37%, and again we got another bullish breakout with another daily closing higher high, so we continue to push higher in this bull trend with new higher lows and new higher highs. Critical risk in IWM will be at 182 and our 50 EMA at 179, so stay bullish as long as we're above that critical support zone, with the next upside price target being up there at 191. Also notice we did go up on increasing volume today, so this is a very common theme across the indices. On the ARKK ETF, we were down 0.43%, and ARKK is continuing to bounce around in this wedge between support at 44 and resistance at 47. Whichever breaks first is going to set the direction in this ETF. So we're getting bullish above 47 and bearish below 44. It doesn't get any simpler than that, so just wait for the breakout and then you can act accordingly. In the VIX, we were down nearly 4% as the VIX continues to get crushed down below 24, with the next likely support level in the VIX down there at 20. We'll likely see another spike in volatility once the VIX gets to 20, so stay on the bull as long as the VIX is below 24 and get a lot more cautious as the VIX approaches 20. On Bitcoin, we're currently up over 4.2% as Bitcoin does have the bullish breakout look with the breakout back over the 50 EMA and that resistance level at 23,500. So this does look like a higher low, higher high breakout, which does tell us Bitcoin is heading back into a bull trend. As long as Bitcoin can close the day above 23,500, it is very likely that we are heading to 28,000 next, so stay bullish on Bitcoin as long as we're above 22,000. On NVDA stock, we were up 1.09% as NVIDIA did come back up to the previous daily high of resistance at 180, and so far we have not closed above that level, but if we do close above 180, that will be our bullish breakout with price targets at 183 and 196. Critical downside support is going to be the 50 EMA at 173, so you should stay bullish while we are above 173. But below that level, look for a retest of the low at 165 and the gap fill at 158 if we break support at 161. So far, this clearly looks like high volume buying and a bull trend with higher lows and higher highs. The next confirmation will be that price action breakout above the previous daily high. On Tesla stock, we were up 2.21% as Tesla continues to push higher, which we did expect to see a higher low forming in Tesla. And we did get the confirmation that that higher low was at 775 after the bounce yesterday. So I do expect to see Tesla continuing to push higher from here. We broke above the price target at 839, so the next price target will be at 863. And if we break above 863, it should be a quick trip up to about 904. Stay bullish as long as we're above 775 or the previous daily high breakout at 816, because this is very close to going full bull once that 20 simple moving average crosses back over the 50 EMA. If we do lose support at 775, we're likely losing the bull trend and filling the gap below at 752. On Apple stock, we were up 0.36% as Apple did get the daily close above 157, which does look like a bullish breakout at this point. We just want one more day of follow through, and if we could continue to break out above 157, we are very likely heading to 163 and then 166. Those should be strong resistance levels, but we still do have a valid price target up there at 174 because we now have the full bull trend with all of the moving averages crossed to the bull side and the bullish price action that we continue to break out to higher highs. So with the full bull trend, it is very likely that Apple is trying to get to 174, but we could see a pullback before we get there. So stay bullish as long as we're above critical support at 150. On the financial sector, we were up 0.73% as the financial sector did get a bull breakout above resistance and is very likely going to fill the gap above next at 33.7. The industrial sector was up 2.09%, confirming the bullish breakout with the second day in a row back over the resistance trendline, and we did fully close the gap above, so the next price target will be resistance at 95. The healthcare sector was up 0.64% with the second day in a row of confirmation breaking back above 131 and hitting our price target at 134. Above 134, the next price target will be 137. The energy sector was up 0.56%, coming back up to the 50 EMA and failing to close above that level, and I do expect this to be strong resistance in the energy sector, so keep in mind if we do get rejected from here, we are very likely coming back down to support at $70 or closing the gap at $69. So jumping back over the S&P 500, please do not completely ignore the fact that we have a bull trend with bullish price action and continue to try to short a bull trend. That is just a bad idea and a very quick way to lose money. If you want to be bearish, wait for a rejection at resistance and a break of support and losing the bull trend, and then you can short like the wind. This is a bull trend that a lot of people have doubted, and that pessimism is only going to make the bull trend stronger as shorts continue to pile in and continue to get short squeezed. Just imagine a huge bonfire and you continue to throw gasoline on that fire and it just continues to burn hotter. Do not be part of the short squeeze crowd. Understand this is a bullish chart and we do not care about the fundamentals because everybody following those fundamentals is getting absolutely destroyed right now because they're ignoring the technicals. Whether or not the bear market has seen the bottom or not has nothing to do with this bull rally. It is 100% a technical short squeeze and we are going to stay bullish as long as the chart is bullish. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.